Hey everyone, welcome back to another episode of the Free to Grow CFO Podcast, where we dive deep into conversations about scaling a profitable DTC brand. I'm your host, Jon Blair, founder of Free to Grow CFO. We are the go-to outsourced finance and accounting firm for 8- and 9-figure DTC brands. All right, today I'm joined by one of my fellow Texas Hill Country homies, Jon-Mark Craddock, JM talking to JB, owner and CEO of Lamaterra. What's happening, man?
Nothing much. Glad to be chatting with you for sure. This is probably going to be an easy conversation because you're one of the bros.
Yeah, I know. I'm gonna probably have to keep us on track more than find things to talk about.
No, 100%.
Well, I'm stoked to chat. Like John and I have like a really interesting background. We share a first name in many ways. I'm JB, he's JM. I guess we're both kind of officially the first employees at the respective ecom brands that we help scale. Me at Guardian Bikes, you at Chubbies, and have both since started other businesses. So I guess before we dive into kind of talking through the meat of the conversation, which will be around many of the lessons learned of kind of the multifaceted background that you have. Tell everyone a little bit of your story, where you came from, how you got to Chubbies, and then where you're at today with the businesses that you run today.
Yeah, totally. Thanks again for having me, man. I appreciate this. And JM, it was like John said, I was the first employee of Chubbies. There were 4 founders of Chubbies, and they started it back in 2011. And I came on as a intern summer of 2012. And that summer is the summer that we went viral. Like everything just kind of like went to the moon that summer. And during that time, I was handling all of our customer service. We were all doing everything during that time.
Yeah.
Whatever had to be done was done. But whenever it went to the moon, the guys were like, hey, we don't want you to go. I'm originally from South Carolina, and founders of Chubbies were Stanford grads, and we started the company over in San Francisco. So they were like, yeah, we don't want you to go back to school. So I actually quit school, didn't go back, like had some type of conviction that this shorts company was going to work out. And 10 years later, definitely did. It was great for sure. So yeah, so I cut my teeth at Chubbies, doing all things customer service, retail, real estate, anything that needed to be done. I was done. I was there for almost 10 years. I then went to Marine Layer, built a bunch of stores, and did the real estate game at Marine Layer. Then went over to Tuckernuck, it's a behemoth ladies e-commerce brand out of DC. They were having some operational complexities like everybody in COVID. And so I went over to help them out on the fulfillment and supply chain side. I was there for almost 2 years through COVID. I tell everybody it's my like MBA of supply chain.
PhD. I got a PhD in supply chain during COVID too.
Totally. It was insane. So that was an awesome experience. During that time, we were lucky enough to sell Chubbies. I parked up some cash, and I used a little bit of that money to buy Lamaterra, and now we're in full on operating our own brand. It's pretty fun.
Hell yeah. Dude, I actually am not joking you. When we were, I was operating as COO and CFO of Guardian Bikes during COVID. And so my supply chain team, I had like a VP of product who was really involved in supply chain because we made everything in China. And so like those relationships and the manufacturing process was key. And I had a VP of supply chain and then a couple operations managers. And everyone was so burned out from just like, we just had to get on calls whenever a call needed to be gotten on. Because we're like, is this container going to get rolled? Can we get on this truck? Can we get on this train? And it's funny you mentioned the MBA thing, because the way that I rallied the troops when they were like super tired was like, hey guys, this is a once in a lifetime opportunity to get a PhD in supply chain operations. Like you're going to learn more for however long this thing lasts for. You're going to learn more in this period than you're probably ever going to learn about supply chain. So that was how that's how I rallied the troops,
Yeah, I couldn't agree more. Yeah, we had, endless crazy fires that we had to put out, but probably the biggest one, the one that I was most helpful in, is their 3PL was this kind of like mom and pop 3PL. They just couldn't handle the volume. They were growing at, I don't know, 150% year over year at mega numbers. Like it was like insane. And so they had something like 2 or 3 months of returns backed up, like unprocessed and Gaylords. Like, it was just a mess. I was the guy to come in, was like, all right, we got to do something different. Like, and in, I think it was like 11 or 12 weeks, 60 full, container or trucks later, like we
Oh
moved
my gosh.
everything to Ohio just in time for peak launch first week of November. It was like insane. And it was COVID too. So I was ripping from Austin up to Ohio where our 3PL was, and I would have full planes by myself Monday morning to like, it was weird. Like, it was just me and like maybe 2 other people on a full plane, just like,
Pilots were letting you fly,
yeah,
fly the
yeah.
plane. Hey man, you want to
Exactly.
come?
You got here. Yeah, it was insane. It was like it was insane. So, but awesome experience. I mean, I love all those folks so much to this day. They're great. They're great folks for sure.
So let's talk about something that I think is super real for so many brands that I encounter. You're scaling really fast, right? And we see a lot of brands, like their supply chain or even their fulfillment network or process or provider, it just starts breaking. So like, with the experience that you have under your belt, just start going through some of the things that come to mind. Like, a brand's like, hey, JM, I need some advice about what to do proactively so that my supply chain or fulfillment network doesn't break down. What are some of the first things that come to mind?
Yeah, I mean, I'm big on just jumping in and taking on the reins like immediately whenever I see a problem. I think that's my biggest thing is I don't really like to let things fester. Like, you're just going to cause more problems for yourself. And so I think my biggest, thing that I would say on that front is like, if you see a problem, yeah, like try to be partners with a 3PL or whatever it is, and wherever the problem is, try to be good partners, go to them with a resolution, be like, all right, like you're going to have a month or 2 months to but we got to get this right. Like, we got to right the ship here. But if you start seeing problems that they're just not being solved, I think you have to trust your gut and just go with it like immediately and find the solution out of there. I think a good story with my personal experiences. Whenever I bought La Matera, we were in a 3PL. We inherited a 3PL relationship, and I felt bad for him because it was this 3PL out of Salt Lake City, and I was coming off of a beautiful 3PL operation with Tuckernuck, and I went to them right out, and I was like, hey, unfortunately, this is where the height of my, experience is going to come with this transition. And I was like, we got 1 month to write these SLAs and write everything. If not, I'm going to fly my happy tail to Salt Lake City. I'm going to pack my belts up in a U-Haul, and I'm going to drive it back to Austin. I'm going to run my own warehouse. And I was like, and I don't think they really thought I was serious.
Believe you, they didn't believe you. I would have
Like,
believed you. Knowing you, I would
exactly.
have believed you.
100%. I don't think so. And sure enough, like we got to the end of, I think that was the end of September. I had met with them like pretty much every other day. They weren't riding the ship. And I was like, I can't continue running something like this like right before Q4. And so sure enough, I flew to Salt Lake City. I got myself a U-Haul. I packed the belts up myself, drove back here. We were down maybe a day and a half, and we were shipped clean 2 days later, and just like completely operating, which now we're sitting in our own fulfillment and warehouse over in Spicewood.
That's so awesome, man. Man, I have so many follow-up questions on that. Let's actually segue. That's a nice segue into talking about the decision. Now, obviously you yourself were very proficient at like warehousing, fulfillment, and operations. But like, if the average brand founder who's using a 3PL is considering the decision of like self-fulfilling, right, versus keeping that outsourced, what are some of the real things that they need to like consider before deciding to take that on?
I mean, what I will say is you will save money doing the fulfillment yourself, but you will not save time. And so like everything is a scale, right? And so I love having the control of our inventory, and I love like having it on hand. And something happens, John, you say, hey, I'm going to meet my father-in-law tomorrow night. Can I swing by and grab a belt, like a gift for him? Like, I can just make that happen immediately. If all of our product is sitting in Salt Lake City, it's a little bit harder for me to do things like that. And so I would say a good percentage of gross revenue, probably, and you would know better than I do with all the brands that you see, but I would say probably in between like somewhere around 10 or 12%. It goes to fulfillment and parcel and shipping fees and all that kind of good stuff. I have my P&L for this year our shipping line is like 5.75%. Like it is super low. So you will save money, but like the trade-off is you have more headache. You have people to manage, you have a physical space, you have like you are controlling your ins and outs. And if you don't hit your own, like if you don't set up a process and hit your own SLAs, then it's your fault. So like
For sure.
you can't just go to a 3PL and be like, "Hey, fix this," because you're the guy. So I think that's my biggest thing is like, while yes, you will save money, you will definitely like have more things to deal with.
Well, and I think as a kind of more generalized framework or best practice to draw out from that, it's like, what core competencies do you want to be managed in-house by your brand? It's not the same for every single brand, right? And honestly, like part of it is what you should manage and part of it is what you want to manage. Like part of being an entrepreneur and starting a brand, right, or buying a brand is like, I want control over the journey. And like, it makes perfect sense for a guy like you with your background and the areas of passion that you have. Like, no, we're definitely going to run our own warehouse, right? Like there's no doubt about this, right? But someone who is more product centric or marketing centric in their core competencies and kind of like the early team that they built or the problems that they want to solve, right? Like then yeah, considering outsourcing fulfillment could make a lot of sense. I'm curious to get your opinion on the keys to kind of like the tech, the WMS. Like what are some of the things that like a brand needs to think about when they're considering the right apps or applications to use to actually run the fulfillment operation?
Yeah, I mean, it really like I think it would go back. Like you can spend any amount of money on everything, right? Like you can get really aggressive, and it kind of goes back to like what your goals are. Like if you're in a hyperscale business that you're like you're taking this to like 100, 200 million in revenue, like for God's sake, give it to a 3PL that has experience with like hyperscaling, right?
For sure.
My goal with Lamatera is to grow it like, I don't know, a happy 5 to 15. So like I'm done. I'm good on that. Like I'm good. We'll see. Like I have 2 young kids, so like we'll see if the juices get flowing, I don't know. 3 or 4 years from now, if I want to really go for it. But I think that's the first question is like, all right, what is my goal with this? Like, are
Totally.
you trying to run slow, build a lifestyle business, or are you taking it to the moon? If you're taking it to the moon, go 3PL route. They're going to be pros. They're going to get you there, and you'll pay a little bit, but they'll get you there. If you want to like run a business like I do, which I want to be super lean, and like any dollar I save in Lamatera is going to go back to me ultimately, I think you could be pretty frugal. And so I think for our systems, we have like ShipStation, like super easy ShipStation, obviously Shopify. And that's essentially it. We use some back end kind of organization through Google Sheets and all that, but it really is not complex. Like it's not hard to kind of get, your product in and ship it to your customer. And then, I mean, these days with ShipStation in particular, and I'm sure any of these like little shipping apps, they have their own rates and they're well negotiated. They like, bundle up all of their, all their volume to get the best rates as well. So I'm finding like with our volume, I can't go to DHL like I could at Tuckernuck. I can't go to DHL and be like, hey, give me a 30% discount. But ShipStation, like for a small brand like us, like they have a pretty well negotiated rate that we just can kind of tap right into.
Okay, so the next thing I want to talk about is like demand and replenishment planning. This is, I'm sure between like the hyper growth that you saw at like Chubbies and Tuckernuck, and then also what you're seeing more stable growth at Lamatera, you've kind of seen both sides of the spectrum, right? So let's start first on like the fast scaling side of things. And maybe, I don't know, like, I'm not sure if Chubbies was launching new products super frequently or not,
Every week,
yeah. Okay, so you got a fast scaling brand, you're launching new products. I want to go through some of the best practices and the myths around like sound demand and replenishment planning, in your opinion.
Yeah. I mean, I would be candid and say like, we probably didn't do this great the majority of the time that I was at Chubbies. It was like the classic, like, we would overinvest in inventory. We would have a shit ton at the end of the year that we'd have to liquidate. And then we would underinvest. And it was this like massive pendulum all the time. So, I would say we probably didn't do well, we did a great job, obviously, but like it was the massive pendulum shift that was always happening. And I was on the opposite side. I wasn't on the demand planning side or anything like that. And so in a hyperscale company, and similar to the conversation we were just having with 3PLs, is like if you are going to the moon, hire the right people and hire gangsters in there and put them in
Yeah,
their seat and let them
for
do.
sure.
Like just let them cook. Like
Yeah.
I remember some of these like kind of like big demand planning meetings to this day. And there was a bunch of gangsters in Chubbies, but like there was one gal in particular who was over demand. And I would just sit there and be like flabbergasted by how epic she was. I was like, this girl is a beast. Like I was just like, she was a gangster. And so I think that it kind of goes into it. Now I'm at La Matera. I handle demand myself. And, basically, like in a company like ours, we just spend the amount of money that we can, and that is the like max we can do. And so, like that's the only thing. Like we have, and I think we'll kind of go into this next. Probably a good segue is like we have an SBA. Like we bought the business with an SBA loan, and so every single month we have a SBA bill due and we got to pay that bill, and any money that's left over we can use for growth or whatever, pay ourselves and do whatever we want with it. But I think that's where I'm at now on a like kind of smaller, like, happy scale. I would call it happy scale versus hyperscale. We just buy the inventory that we can. That's kind of
For
like,
sure.
that's kind of where we're at.
Well, the reason why I want to ask you this question and get like, I like asking this question to people who've experienced it firsthand, because I oversaw demand planning for most of the time that I was at Guardian Bikes. And yeah, it's very imperfect and we were always wrong. And I've started to realize that it's not about, the baseline kind of math, you should root it in some sort of historical data. Because if you don't, then it's literally just 100% a
Finger in the
guess,
wind.
right?
Totally.
Now, but I want to be clear, there is not a system, whether you're talking about a software system or a framework or a mathematical system, that will give you the perfect quantity to purchase, right?
If you find that system,
Yeah,
I will
please.
pay for it.
I will pay for it with an SBA loan.
Literally, 100%, 100%.
No, but and I want to say this because one thing I think is really important about this podcast is that we're candid, right? There's so much stuff in ecom that's sensationalized, man. The next new AI app, freaking the next marketing agency who's gonna crush it for you. And like the reality is, I actually think this is a universal truth in business, but like I'll speak to it in the ecom inventory-based business context, is that like you're making these inventory planning decisions, just like all the other decisions you're making, with imperfect information, right? And whatever system you use, whether that system is manual or automated or software based, it's all to give you directional accuracy, right? And what's more important than anything is assessing how risky the bet is that you're placing, not scoring the accuracy of it or assuming it's going to be all that accurate, because rule number one of forecasting is every forecast is wrong, right? But as I'm sure you've learned over the years from all of your experience, and what we're starting to try to do more and more at Free to Grow CFO is like, look, we're not here to give you the right answer because we're going to give you the wrong answer, but we're here to help you assess how risky this bet might be, right? And then you recalibrate the bet according to the risk that you are personally willing to take, that's in alignment with your goals and your
I think
guiding
it's about
principles.
like a regular recalibration too. Like I think
Totally.
that's where the success lies. Is like, yeah, you said whatever in January, like great, like good luck nailing what your yearly goal is going to be. But like you just have things that happen. I mean, it seems like these days, like every other day, some weird thing is happening that like shifts markets or like does something weird. Tariffs come and now tariffs are away. Now tariffs are back. Like you just have to hold on and like just make the best call you can. But I agree that like you want to set your direction like early. You want to have the
Totally.
like, you want to have the framework, you want to have your thoughts, figured out and sit down and make sure you're making like a thoughtful decision. But then the regular reassessment is like, I think that's where the like that's where the magic happens for sure.
Well, you know what I'm starting to find, man, like more and more as I grow my own businesses, and I also, at Free to Grow, we're helping, dozens of brands at a time grow their businesses. Goal setting or any form of planning. Planning is really important, but not because it's going to create the exact desired outcome that you think it's going to. It never does. It's actually more about finding a planning or goal setting journey that you're willing to just be on for the rest of your life. And like you said, revisit it, frequently. And I think I'm starting to learn the faster your business is growing, the more frequently you have to revisit it, because the faster things are changing. The slower it's growing, you might be able to revisit it less frequently, because the velocity with which things are changing and complexity is being added to the business is much lower. I was listening, I can't even remember who it was. I was listening to someone's podcast a couple of months ago, and he's like some sort of like a, like an executive coach or something. But he's like, man, I'm like in my 50s now, and I'm starting to tell people, like, I don't set goals anymore. I trial goals. And so what I'm saying is that, like, I still define them, but I hold them with like an open hand instead of a tight fist, because when I hold them with an open hand, I can say, like, I can ask myself the question, like, is this still a good goal or is it not anymore? And I give myself the permission to revisit it through the lens of what I've learned since I originally set the goal. And when I say, like, I'm trialing it, I'm willing to change it, but I don't just change it for no reason. I change it for a good reason, right? And so anyways, that's just something that comes to mind as you're talking through that. I want to talk next about La Matera. So you help scale several brands, starting with Chubbies, ending, what was the last one before La Matera? Tucker Nuck.
Yep.
You have an exit at Chubbies and you buy La Matera. So before we get into like how you executed that, what was the drive in you personally that was like, I want to buy my own e-com brand?
I think I just consider myself kind of like unhireable. I'm just like not really a good, I want to be like taking the reins, and I like all of my managers to this day probably are like, thank God that guy just got at the head of a company, because like he does not need, yeah, because I was a knucklehead. I just wanted to make the calls, right? And if the bad came, I wanted to take the bad. If the good came, I wanted to take the good. And I think that's how I've been literally my entire life. And so it was definitely the right move. I mean, whenever I started, we got to the end of peak 2022 at Tucker Nuck, and it was a crazy, crazy time. Like, they were in insane growth. And that's whenever I really knew, I was like, all right, like, it is time for me to step away. Like, I at that time I had a 6-month-old at home. Like, it didn't make exact sense if you were like, papering it up. But I knew it was time. And I let the gals at Tucker Nuck know towards the end of December after peak, and basically like kind of phased out over the next like couple months, hired my replacement, did all that kind of good stuff. And first week of March hit, I left, and La Matera popped up on a business brokerage site 2 weeks later. It was like perfect timing, perfect situation. I knew the brand already. They followed me on Instagram randomly. It was like all pointing towards the right thing. But to get back to your question, it's like I knew I wanted to get out there and build something or buy something. Like, I was like, for 2 years prior to that, I was on all the brokerage sites. I was on all the things. I was like trying to figure out, I was playing around with like creating like a workwear company. I was like doing all kinds of things just to like figure out my way out, because I knew that's where I like needed to be. Like, I just knew in my heart.
So I want to talk a little bit about how you kind of financed and executed the purchase. This is like really, really interesting. It's something that I'm personally interested in at some point as well. And like, I think there's, for me, when we think about like buying assets, right, with money, your own or other people's, there's kind of three that are interesting to me. One is real estate, and one is businesses. The third one, which you primarily use your own money, is just like investing in the stock market, right? I think of the stock market as the kind of like the some allocation of your money, just set it and forget it, right? And just like, I've got this 55% in the S&P and whatever 40% in the NASDAQ or small caps, and the rest in like an international index fund. So that's just set it and forget it. There's not much entrepreneurial about that. Then there's buying businesses, buying real estate. you chose to buy a business. Talk to me about how you guys, like how you financed that purchase.
Yeah. Yeah. I mean, it was crazy. So when we got like we mentioned, we got an SBA loan. I'm a huge proponent of the SBA program for first time business buyers. Yeah, I had track record of like operating at companies, but I didn't have track record running one or buying one or anything like that. And so that's the beauty. I think it's just the US and Japan are the only two like countries that have somewhat of a similar situation where you can like get an SBA or kind of government backed loan to purchase the business. So I think that's the big way that we purchased it. Obviously I had a stack of cash from Chubbies that I threw in, and then I had just buddies that like that sit on our cap table. And so I think we ended up putting, oh man, my brain's not where it used to be. I think we ended up putting something like 16% down or something, but you basically put in between 10 and 20% down, and then it's an SBA backed loan. So you're working through a bank, but like the SBA has this crazy colonoscopy of a checklist that you have to go through. And it was crazy. It was like a 3-month, like the bank comes at you and analyzes everything for your personal. They analyze all any investor that's touching it. They analyze the business. It's crazy process. So you have to be a little bit like kind of, fine with chaos to like jump into a SBA situation like that. But I find that like I love the process of going through it. And like I would kind of, like I said, I left my full-time job. So it was, for that 3 months, like that was my full-time job. Like I just sat there and I prided myself on answering any call from a banker, lawyer, like any of the cats that are in there, like within 5 minutes. Like if somebody sent me an email at Saturday night, like they knew they were getting a response. Like it was happening. And so that was the like process that we went through.
So here's why I actually know a lot about this as well. I've never executed myself, but I've done a number of SBA deals over the years. And like, here's some of the advantages from a finance perspective of using an SBA loan to acquire a business. One, you can get a 10-year term loan, which if you were to get a loan that's not through SBA, typically those are 5 to 7 year terms. And so what does that mean? It just means your payments are higher. So the likelihood that the business will cash flow after debt service is a lot lower on a 5 to 7 year amortization schedule than a 10-year, right? The other thing is because it's backed by the SBA, it's generally the best cost of capital that you're going to get from a lender to buy a business.
Yeah, I think ours is prime +2 or something like that.
Yeah, you're just not going to get that buying a business like it, for most people. And then the equity injection, you just have to be able to put 10% down. Now keep in mind, it does need to be able to cash flow. And so what Jon was just talking about is that like, and I actually think this is a huge advantage. If you're a first time business buyer, actually the SBA or the lender, the whole underwriting is done besides the owners, because there's certain criteria that all owners that own 20% or more have to meet in order for the deal to be, backed by the SBA. But the business, basically the payback ability, right, is all based on the target company that's being acquired. And so you actually kind of have in your corner, you have the lender who's doing diligence on the target company on your behalf to confirm that this thing is going to cash flow. Because actually, if it's not going to cash flow, either you have to put more down to bring the loan amount and the payment amount down to get it to cash flow, or they just won't finance the deal. So interestingly, it's kind of akin to buying real estate. Like I've had times when I'm doing real estate deals where the lender's like, hey, we can't do this deal because this thing's not going to cash flow. And so I can either put more down or try to negotiate the price down with the seller. Oftentimes you can get a little bit of both, but it's actually, I think, a lot safer of a way to purchase a business for your first time, because you have this third party in the lender who's actually helping you do a lot of the diligence that you may or may not do a good job of otherwise on your own, right?
It makes you sit down and do it. Like you
totally.
Like,
or you don't, it doesn't get approved, right?
Literally, you have a check. They have a list of 300 checked boxes that you have to do, and so I think that's a perfect, like. Otherwise, you may get too emotional, and you're like, all right, like I just really want this business, and I've been going at it for so long, and like you may make a bad deal.
Totally.
And especially for the first one, it just like forces you to really think about it. But I think and if we're talking about like SBA, sorry to cut you off, it's like,
No, go good.
In a spirit of like what we were talking about earlier about over sensationalizing it, let's talk about the bad as well.
For
Because
sure.
there is some annoyances. Like one, the PG, there's a personal guarantee. Like luckily,
and you can't, by the way, you can't negotiate that out. That's actually the SBA SOP that the lender has to follow. That is not negotiable. I know that for a fact.
Yeah, I think the one thing that got me a little bit more comfortable with it is, like if we go belly up, that would really suck. But in Texas and probably other states, but in Texas, they can't take your house. So at least at least my like kids will have a house to live in.
For sure.
But that's a big one. Like you got to have like major conviction in yourself and your ability to lead and run a good business and make it happen. So like that's a big one. And then the next one is like, we were talking about like, the cash flow, paying a monthly bill that is like any kind of sizable bill. It just limits your cash to do like anything with growth. And I'm like a, opportunistic kind of like, I don't know, just like ambitious person that like, I would like to grow Lamaterra 150% year over year. But there's just like the cash is like goes to the SBA, and then anything that's left over, that's you can put in the sandbox to play with. And so those two things are in my mind just like something you really have to like take a look at and like keep in mind when going into a deal, because if they can look at the financials and they can make sure the financials map and like the maths, but you still, if you want cash to grow any kind of amount, you got to account for that SBA like payment every single month, for that 10-year term.
Well, and that's why like it's really key. I mean, and like we just said, you can't even get the deal approved by the lender if this isn't the case. But that's why this is a good strategy for a cash flowing business asset, right? Because one of the rationales for it is that like after 10 years, when it's paid off and you don't have that note payment anymore, if the business still cash flows cranking at that point, right?
Yeah, and you deserve it. You deserve your distros.
And you use mostly other people's money, right? So the let's talk about like kind of like the flip side. The flip side is don't use a loan and you end up raising all equity capital to purchase that business. Then the question is, how much of the business do you own at that point, right? That's the trade-off. And to be clear, neither one is good or bad, right? This really comes back to like, what are you trying to achieve? Right, as the owner, what are you trying to achieve? What are your goals? Kind of like you mentioned earlier, like comes back to like, well, what are your goals? And if this may not be the right strategy for someone who wants to, hyper scale. That's oftentimes why, it's one of the reasons why hyper scale is usually funded at the beginning by equity, because the theory is financially, you're going to have a smaller percentage of the pie, but you're going to build a massive pie, right?
Totally.
And so that your slice is going to be bigger but you have to deal with all of the complexity and the side effects of the second order consequences of being on a hyperscale journey. For one, I tend to side with guys like you for my own personal situation because I've been a part of hyperscale. I now have 3 little kids and I'm like, I only got so much mental, physical, and emotional energy to hyperscale. And so there's some sort of a balance. How many years into owning Lamaterra are you?
We June of 23, so we're 2 and 3 or 4 months, something like that. We 22nd, 2023.
So what's been like the major learning for you personally, going from being an operator in someone else's business to being like the primary operator in your own business?
I mean, there's just been so many learnings. I don't even know where to start. I think I mentioned this earlier with just putting the gangsters in their seat and letting them cook. That's been one of my biggest learnings, is like just having the right people doing the right things. You don't have to have a headcount budget of $1 million to have like a really, really successful like team doing exactly what they need to be doing and having like a well-oiled organization, And so I think that's probably my first thing, is just like we're running a pretty lean ship over here. Whenever it comes to full-time work, it's literally just me. My wife does some stuff on the warehouse and wholesale. And then we have pretty much all contractors doing like all the, the twisting of the knobs and levers in the background. And so like, I think the thing that I've learned over the last 2 years, 2.5 years, whatever it's been, is like I've injected some buddies in there. I've injected recommendations from friends and all this kind of stuff. And like some of them have gone good, some of them have gone fine. And I think the way that I'm trying to build this thing is super lean. And so I'm like, all right, I just found this new marketing squad that's handling all of my digital marketing. They are the exact right people that need to be in here doing this. Like they have a great price and they are extremely efficient and they do the exact right thing, And so like, I think that's our biggest learning kind of to date is like, all right, have the right people doing the right things.
For sure, man. And it's key to like have the right people for right now, but always be thinking about like when you hit a certain whatever size threshold, whatever, you're like, this is probably what I'm going to need when I get there. But then when you get there, you'll also begin to have a much clearer view of what's starting to break, right? And so it's like, and I think the point I'm making is I think founders need to always be thinking about what they will possibly do, but before making a decision on it. I oftentimes, I was talking with my wife about this recently, that like, hey, there's a difference between saying, I know I need to do this eventually and acting on it. Or saying, if this happens, then I'll do this. If this happens, then I'll do this. I think sometimes we feel like we have to act on our kind of creative thinking, on our like what if scenarios, right? And like I've known things many times in businesses that I've helped scale up to this point where I'm like, this is going to break. I'm not going to do anything about it right now because it hasn't broken yet, but I'm going to keep my eye on it. And I'm going to keep researching what I'm probably going to do when this thing approaches breaking. And I think that's just important for
like, that's one of the things is like, you just have to make those hard cuts and hard decisions. Like you have to make them much faster than,
totally.
And the risk isn't there when you're working in a company. Like it's somebody else's company. It's like, if you don't have to act so quickly, but yeah, you have to make the hard cuts quick. Like you just get it over with. You know what I mean? And I think that's like, that's what we're doing this year. Last year we invested in a bunch of things. We threw money at expanding our production and doing all kinds of like, we bought a little belt brand and we did a bunch of stuff with our cash. This year I'm like, nah, that shit's weird out there. I'm holding on to cash and I'm figuring out a way to be comfortable. So like we've had to have hard conversations this year, make cuts. And really I think that's literally been my entire job all year is just to be like, all right, tariffs happen, supply chain weirdness is happening, all this stuff is going on, there's softness in consumer, like how do we like right this ship? And so like I may grow like at a smaller percentage on the net revenue this year, but my OpEx is just like squeaky clean. Like it's just all right. Like you just get in that mode of like, all right. And then maybe next year things are hunky dory and you're like, all right, let's just take all that cash and put it back into OpEx and try to grow and keep on keeping on, So I think that you're just trying to do the best you can. That's like the moral of the story, and you just staying alive. That's your job as a founder. It's just stay alive, dude.
Dude, keep on keeping on. I always like a quick little Joe Dirt plug right there. Life's a garden. Dig it, man.
Yeah,
keep on keeping on.
Right.
Well, okay, so unfortunately, we're going to have to land the plane here. I got 3 little kids I can hear screaming outside that are waiting for me to go make them dinner. But really quick, one last thing that we didn't get to. You guys, am I correct that like in addition to your own fulfillment, do you guys actually do fulfillment for a few other brands as well?
That's right. Yeah, we it's a pretty small operation. It was mostly just opportunistic after all of the tariff situation. So whenever all this stuff started bubbling in, January, February, March, I'm a part of an online group called E-commerce Fuel. Great group if anybody's looking for kind of like an online forum type situation. But there were people just freaking out. Like, I mean, luckily all of our production is made like either in Argentina or the majority is up in like the Northeast. But there's a lot of folks who had 100% in China or either like India or somewhere like that. That's just got totally worked. And so people were freaking out a little bit. And so I had extra space in our warehouse, and I was like, I have a good operation going on here. So why not just kind of take on some brands and like do a little kind of like co-warehousing kind of like mini 3PL type situation. So yeah, we have a couple brands in here that we handle and just get their stuff out the door as well.
Awesome, man. Well, where can people find more information about you or La Matera or even your warehousing and fulfillment business?
Yeah, I'm pretty much at lamatera.com. That's the easiest place to go. If anybody wants to get in touch with me, just shoot us an email over at hello@lamaterashop.com, and somebody will get in touch with me for sure. But I'm on all the things, LinkedIn, Twitter, all that kind of stuff. Just look for Jon-Mark Craddock and you'll find me.
Hell yeah, man. Well, this one was fun. I feel we only got to like less than half of what
Classic.
we could have talked about. We're gonna have you come back.
I'm here anytime. I think we should do a carve off podcast of like business owners with kids under 5 and how they are alive.
Yeah, and how they are alive.
Like we should just like interview people with like who's bought businesses and has a 3-year-old. That would be hilarious.
I mean, I am actually totally down. I have this secret kind of plan that at some point, I don't know if it's while I'm doing Free to Grow, maybe at some point I'm not doing Free to Grow anymore, but it's this, it's the Dadgerpreneur podcast, the Dadgerpreneur show. So maybe that's it. Maybe this is the sign that we got to start the Dadgerpreneur show.
Dude, yeah. I'm buying the domain right now.
Yeah, damn it. And then you're going to end up price gouging me to buy it back. I love it, man. Well, thanks for joining, dude. This was a really great conversation, and man, I think I'm probably gonna have you back on again. And if we do start the Dadgerpreneur podcast, that'll be a plug in the Free to Grow CFO podcast shortly here. But yeah, thanks for joining, dude, and look forward to chatting again soon.
Likewise, man. Appreciate you.
Don't forget, if you like today's episode, please hit the subscribe button wherever you're listening and leave us a review. It helps us reach more people like you. Also, if you want more tips on scaling a profitable D2C brand, follow me, Jon Blair, on LinkedIn. And if you're interested in learning more about how Free to Grow CFO can help your brand increase profit and cash flow as you scale, check us out at freetogrowcfo.com.